Welcome to Tesla's Options 2.0 based on the Yahoo Finance page. So we're currently in the 2.0 mode, and I wanted to quickly take some time to go through the numbers again. So, wow, screen's not cooperating. So what we actually reviewed this week was the fact that there are a number of ways you can get raw data to work with to figure out kind of what does the market think about Tesla, its options, its future potential. There's a ton of data lurking out there, but I actually just got an email from one of our viewers giving us some ideas of sort of how analyzing some of the recommendations we made worked out. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. Again, we want to thank our Patreon supporters as well as our subscribers. Your support is greatly appreciated. It makes a huge difference in the viability of this channel and is greatly appreciated. So we have other, I want to say, fish to fry, things that are coming up relative to Tesla and the implications on its stock. But we had, particularly, we have a friend of the show named Carlo, and he actually spent several hours going through the recommendations we made on understanding Tesla's options when it comes to going onto the Yahoo Finance page. As you may recall, I did share that there's a lot of ways to get the base data to work with here. The bigger issue is, do you understand what's going on? Getting a little bit of help here. So what I wanted to show you here again is what we're looking at is what's called the option string for Tesla. So basically what I did was I typed in on the Google, I typed in Tesla. So I typed in Yahoo Finance and then Tesla. In the middle of the page, you'll see a line that says options. So I press that button, and what I'm getting is what you see on the screen. So what I decided to do for today's show was review some of the questions that popped up that were being asked by folks that, particularly Carlo, that did all this work. I'm actually going to post the email that he sent me analyzing all the points that I made, and I think you might find it useful on Teslafaninsight over on our Facebook page so that you guys can sort of dig through the data further to get some more analysis. Now, Carlo did a ton of work that I was impressed by. Number one, I talked with you guys about ratios. So what are my ratios? Well, a great example would be when it comes to something called the 750 call that expires on the 30th of April 2021. The numbers that I glanced at were 11,000 calls and 540 puts. So there's an example of a ratio differential. So, you know, we're looking at 20 times the amount. So if, you know, we were looking at that number this Friday, that doesn't expire till next Friday. So you get a feel for, in general, you know, what people's thoughts are in terms of what Tesla's stock price is going to do. And so there are a few things that I was questioning in the analysis that Carlo did. Number one, the biggest numbers of options for the next week of Tesla that are, if you look close to where the stock price is the 700s, the 750s, and the 800 calls. Now, if we want to go further out, you'll notice that and you'll be able to guess this based on our discussions, is the further out numbers will be the 850s and the 900s, and then vice versa, the 650s and the 600s. So I'm emphasizing these numbers for you because, you know, it's the largest number. If you look at the board, it's typically the largest number of calls and then sort of matching puts. But whenever you have giant ratio imbalances like 20 to 1, you sort of get into this mode where it's like, okay, these are the critical numbers that I want to focus on. So in the case of Carlo's list, he actually did an analysis looking at puts and calls at all these different strike prices, be it 720, 730, 705, all these different numbers. And it's not bad to do that. The key to it though is that at the high, the bigger the ratio gap, the more significant sort of those numbers are. So again, another ratio gap, 800 very large, 750 very large, and 700 very large heading to earnings. Now, there are some other pointers we can glean from this. Number one is that we're talking at 750, we're talking about 11,000 calls. At 800, I believe the number was 12,000 that I saw. And the puts I noticed were 540 at 750. So what I want to highlight here is 2 weeks ago, you may recall that there were actually 43,000 calls at 800 on Tesla 2 weeks ago. This week, the number was as high as 26,000. Then as we closed out the market today, it was about 15,000. So clearly the stock did not get there. And so it gives you a feel for the fact that now, wait a second, how come you guys were doing a bunch of covered calls before, but now you're not doing as many? Answer, and stop it before I tell you this, because then you'll be sort of getting the flavor for how this works. The answer is that when you do a covered call or any call that you sell, if the stock price goes above the price that you've sold at, you now have to give up your shares, even though you do get a fee for having sold those calls or puts for that matter. So what this means then is there are a lot of people, when there are huge numbers like 43,000 calls, there are a lot of market makers that have to make sure that thing does not cross, because they actually want those options to expire worthless. Now, that number is somewhat high now, but it's not astronomical. So that kind of tells us that a lot of people are saying, hey, I don't want to sell covered calls here because I'm going to end up losing my shares, but keeping the premium that I got for selling that call. And you also have the problem of the fact that the stock can accelerate very rapidly up or down. And that acceleration means that you would have made more money just owning the shares than bothering to deal with the puts or calls. So I kind of bring up these points because what starts to happen is that as you look at a number, all of a sudden you'll be stepping back and going, oh, wait a second. They're about to announce earnings and their stock price usually moves quite dramatically. So it's probably in my best interest to avoid covered calls for 1 or 2 weeks and then get back to doing it, because I can make money without having my shares taken away from me in the process of how covered calls might work. And by the way, I'm talking about covered calls because I know a lot of you have large amount of shares and you're selling covered calls of them against them, and you're making good money in the process. I'm choosing, in this case, to focus on this because what we're doing kind of right now is talking about tools for your basket. The operative thing that's going to occur with these tools is once you know what tools you have in your basket, and then you have all kinds of, this is a circumstance where I'll use this tool, not that tool. So this is kind of the situation we're in right now relative to Tesla's earnings announcement. I'd have to say that, what does this mean is a question relative to the movement of Tesla's stock price. And my analysis of it would be, hey, if there were 43,000 calls 2 weeks ago and now there are 11,000, both at the 750 and let's say the 800 point, there's a whole bunch of really smart people who know the stock price is going to rise and therefore do not want to be out there selling calls against this rise in stock price. I'd have to say my biggest surprise is 11,000 calls against 540 puts. Now, this is strange because usually you don't have any more than 3 or 4 to 1. When you're going 20 to 1, I think that this suggests that, hey, this stock is going to scream, and it's a waste of my time to go out there and sell puts when the stock is going to accelerate in such a high level. And by the way, not only are they selling puts, but there has to be demand where people are saying, I want to buy those puts. So what we're starting to get into right now is a forest of numbers, meaning that there could be, you know, there's implications to these ratios. It's worth your time to continue to track them. If you're tracking them once a week, Thursday, Fridays, it sort of gives you a feel for what type of pin action the market makers may be trying to pull off. Now, the other thing that comes up here is that there's something, I reference it as the 10% rule. So if you think about the home you're in right now, if you're a homeowner, it turns out in a year or two, in that time period, about 10% of the homes will change hands. So it turns out that the 90% of homes that are not changing hands, the value of those homes is decided by those who were the 10% who sold their homes. They're dictating the pricing to the rest of the market. So I think this is an important concept to understand, because when we come over to Tesla, you know, there's a large number of institutions that are holding on to their shares and not selling them. They may loan them for people who want to, you know, do stuff trade-wise that we've discussed in the past. But it turns out a fairly small percentage of the shares are dictating the value of the rest. So I definitely would say that we have a situation here where there's a large number of people who are trying to figure out what's going to happen with Tesla over the next couple of weeks and how to trade it well. Now, my read on this and what's valuable about trading options and taking the time to chart what you see and making notes on what happens a couple of weeks before earnings happen, is that all of a sudden you start to get a feel for what different players in the market might be doing. There's a lot more options traders that are hedge funds, so the trend for the hedge funds or wealthy individuals, you can kind of see the trending of what their thinking is. So your job as an investor, I want to say in the short term, because Tesla can move very rapidly in the short term, yielding year-long returns in 3 or 4 or 5 business days. So what I think is going to be interesting to watch on the numbers next week, and we'll go through this exercise again towards the end of the week, is now what happens after earnings? Do all of a sudden the number of options spike on one side or the other? How do the market makers react, etc.? Now, one of the phenomenons that we've been talking a lot about is the pins that occur on Friday. What we've actually found is once there's major news like earnings that's come out, and then the responsive comments by the analysts that come after earnings, a lot of the firepower and attention of the marketplace focuses on those companies, especially companies like Tesla that move very dramatically during earnings. So there's this thing where you almost are loading up the gun to figure out which way this is going to go and then be ready to fire at that circumstance. And I really feel like that's the case with Tesla. If you choose to wait, make sure the earnings are good, and then have them come out, and then you jump in, you kind of miss 10 or 20% of the gain, but you also miss 80% of the risk. So this is actually an excellent way to trade what's going to happen during earnings. The one fly in this whole ointment, I would say, is what happened last quarter. So right now, Tesla has a number of projects that are sucking up a lot of cash. And I'm expecting the revenue number to be good, but just like last quarter, I think that the profit number will be good, but not as good as expected. And what this is going to do is cause kind of an up, but more sideways of the stock rather than a steep spike up. And I believe that sort of there are again multiple people looking at a number that comes out. The analysts will be sitting there going, oh, they missed their earnings number, they're screwed, let's drop the stock by 30 or 40 points. Then what I think is going to happen is we're going to see the 3-day rule in effect, where the institutions get a chance to review the numbers, compare notes with all the analysts that they paid to do this research, and then we're going to get this response, I think, midweek, call it Wednesday, Thursday, on the 3-day plan, where we get a lot of buying from the large institutions who see excellent fundamentals that are playing out for the company and want to take advantage of the buying opportunity relative to that as Tesla's stock price pushes towards 1,000. The one other thing that I've noticed has started happening with Tesla, particularly after the S&P activity, is instead of having, moves that might, be a 100 spike right away or things like that, we're seeing that spread over multiple days, over multiple weeks, but you're still getting the result. So the questions, most of the questions have been answered by what we saw in the revenue number, but we talked about our stripper plan for Tesla, and would Elon be engaging in stripper activities that might slow the stock down? What I mean by stripper activities, Germany has had a number of issues that are slowing its coming to market. So all the profit and revenue that the analysts have booked in for that are not there and may not be there in a longer period than expected because of the difficulties of getting the market that Tesla's having. Another issue, and we're going to actually be doing a story about this, is they're now doing test production at the new battery factory with the new batteries. Number one, are the batteries ready yet, and are they in testing? And what's the time frame for them to be ready so that we can see the cost savings they represent to the firm, and therefore profit margin for Tesla rise despite a declining price of each stock. And then there's another clue that everyone's looking for that I thought was interesting. I was reading about is I just saw a piece in Yahoo and other places that says, hey, Tesla is at the peak of its market share in the United States based on the entrance of new competitors. And I thought that was an interesting comment because it kind of makes sense that, Tesla, they're at the peak of their market share, so therefore their market share is going to decline, so therefore possibly the stock price would fall with the market share. But there's one little detail that's a problem with that. The problem is that if the market for electric vehicles, let's say around the globe, was 3 million vehicles this year, right? If Tesla has 75% of that, and then it goes to 70% of that, is that bad news? Potentially it is, but the issue though is, what if the EV marketplace doubles next year and continues to double for the next 4 or 5 years? All of a sudden, Tesla can have higher sales, as much sales as they can make, and be losing market share at the same time because the market size is growing. So there's a bunch of pressure from the Europeans, from the Chinese related to this, and therefore I don't think the market share issue is that big a deal because the size of market keeps increasing, and Tesla is doing all the sales they can into that marketplace. And in fact, the challenge right now is the number of other competitors whose share of the market is declining because Tesla is growing. The number of cars of Tesla is rising, and their sort of share of market is actually falling, which is something that's not being discussed. So there's a lot of information we're going to tease out of these new earnings. Hopefully Elon will answer more than less questions. I'd have to say the biggest surprise I'm hearing right now that I'm looking forward to him commenting on is why they're going to be producing Model Ys in Texas initially rather than the Cybertruck as was planned. And so, this is another mystery that's out there, and it's going to be interesting to find out what happens. So at any rate, as I shared with you, right now, as we look at our options, when you wake up on Monday into Tuesday, take a look at the 750 call and the 800 call, sort of what's going on with it, how many of them are there, how much volume is trading, how much open interest, has the open interest increased, all these little detail points will give you an overall better dashboard view of what's going on with the company's stock, and also sort of the large players positioning themselves ahead of earnings and then positioning themselves after earnings. The only other last thing I would say is there probably 20% of our viewers are rolling more than $1 million worth of shares on Tesla, and some as many as $5 and $10 million. I wanted to encourage you to consider picking up some long puts on Tesla. So what I mean by that would be something like a 650 or a 700 put, and then have it out there. If you want to be cheap about it, just make it for next week so you can spend 20 or 30 grand and get a nice block of hedge on your account. If you're more prudent, I would say long distance thinking, how about 6 months, 8 months out, with about 3 to 5% of the amount of value of your portfolio in puts. The reason I wanted to encourage you to do this is Tesla's notorious for things popping up, and we see a 100 to 200 point drop, or we see a 1 to 200 point rise. So the good thing about this is if we did have the drop, you get a large amount of the value you lose on your shares back in terms of cash on the puts. The bad thing about it is that the money you just spent to buy puts to hedge your portfolio becomes less and less, or even down to zero, as the stock price accelerates. So I think that based on this strategy, if you followed that idea, you probably end up in sort of overnight or the next day regaining the value you lose on shares when the stock rises, in about 4 hours. And so it doesn't feel great to lose money on the put side, but it's a nice way to hedge your portfolio, and you don't have to sell your shares as you're doing that hedging process. So something to be mindful of or consider as a trading activity idea. At any rate, there's a lot more to cover. Tomorrow we'll actually do our usual Saturday review of the week's trading activities and anticipatory what we see coming up in the following week. And we look forward to that show being up about noon Eastern. This is Greg for Teslafaninsight. Also wanted to remind you to like and subscribe. Also wanted to encourage you to consider our health tips. Don't forget, light salad prior to lovemaking reduces the blood flow to the stomach, leaving the blood flow for other activities. Also wanted to encourage you to consider elderberry with zinc, along with vitamin D, vitamin C, as a way to bolster your immune system and with all the challenges that are going on currently. Also wanted to have you consider don't go to bed within 4 hours of eating, minimum 2 hours to let the food digest. Also wanted to encourage you once a week, fried foods, no more. And also wanted to encourage you to consider playing an instrument, going dancing, something of that sort, as a way to improve mental health functioning. At any rate, we definitely look forward to your comments on this. This is a 2.0, so I'm not expecting a lot of you to watch it, but we'd like for you to have some tools in your arsenal as we head into a busy period of trading for Tesla next week. At any rate, this is Greg for Teslafaninsight. Tschüss, German au revoir, French, Lihithro, Hebrew, Choda Hafez, Farsi, Strais, Vicha, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese. And in Jamaica, we say, enough respect, walk good man, G'day, and Hey Do.